Good morning, everybody. Welcome to the Flow Show, Tuesday, the 2nd of December, and well, reasonably quiet morning thus far. Though we do have a few moves popping around here and there. Just before we crack on, just want to make you aware of our sale of the TFP, 30% off. That ends midnight tonight, 23:59 and whatever many seconds, 59 seconds. So be quick, don't leave to the last moment. I'll put the link as usual in the Zoom chat there. So get on that before it's gone. Come tomorrow, it won't be there. Morning, K-Man. How you doing?
Hey, morning, Ryan. Morning, everybody. Yeah, doing well, mate. Thank you very much. Hope everybody too. Oh, we don't hear you, Ryan.
Yeah, sorry.
Okay.
Yeah, we're
No
all fine here. I'm sure everyone else can speak for themselves. But yeah, all good. Right, let's get cracking. Not a lot going on in Asia. We've had a bit of waffling from Japanese Finance Minister Katayama, but nothing of real note. The BOJ's Yendex is up at 75.74 from 75.40. So that's still reflecting some of the moves we've seen in the yen. Over at the RBNZ, new Governor Bremen, who I've completely forgotten ever came in yesterday, said the key focus is to stay laser focused on the core mandate. Says the mandate is very clear that we should focus on keeping inflation low and stable. Past rate cuts will improve growth and employment, and that's as good as it got from her. Coming over to the UK. UK and US have agreed on a zero tariff deal on pharma. That went through by the US Trade Department yesterday, although the US has called on the UK NHS to increase its net price it pays for new medicines by 25%. So zero tariffs, but they want us to put prices up by 25%. Go figure that one out. US Trade Representative Greer says the admin is reviewing pharma pricing practices of many other US trading partners. So may not be UK may not be the only deal in the pipe. Some bad news for the UK, depending on your perspective. There's no place at the table for this EU defence scheme that they're putting together. A load of different countries. The UK will be missing out on that, although Canada managed to get said seat at the table as well. There's been a bit of a bum fight over how much the EU was asking the UK to put in. So that's not happening now. As I say, maybe good, maybe bad, who knows. I've had a little bit of a shift from Bank of England's Green, says that she might shift her view on rates if the outlook for consumer consumption is much weaker than expected. Now, coming so soon after the budget, one might think she's got that in mind. That view might shift pretty quickly if the CBI are correct. They say that the UK private sector sees weak growth and gloom persisting in the months ahead. Pretty much aligned with a lot of our thinking in the chat room as well. We had the Bank of England's latest financial stability report. Everything's tickety-boo at the moment. Various risks and dangers, as always, being propped up. They did cut the capital requirement by 100 basis points, as was widely expected. They would tinker with that. Not a huge move, but a move nonetheless. BOE's Breeden, speaking this morning, said it would be unwise to reduce capital benchmarks further, absent any further reduction in risk. Over at the ECB's Kocher says that the ECB should keep its powder dry and be able to react if needed. The ECB need not react to small deviations around the CPI goal. Sees a need for caution on US stock market valuations. While we're in Europe, German Engineering Association VDMA has seen engineering orders up 4% in October year on year, with domestic orders unchanged and foreign orders up 6%. However, in 3 months, August through Oct, engineering orders fell 6%, with domestic down 3% and foreign orders down 8%. We did have CPI out this morning. from the Eurozone flash numbers, and headline CPI came in a bit hotter than expected at 2.2%. The core remained unchanged at 2.4%. So it's not coming down, let's put it that way, and it's looking a bit sticky around that 2% area, which the ECB won't mind one little bit. A bit of data from yesterday. We had all the PMIs and whatnot. We had, excuse me, we had, where's it all gone? There we go. We had Canada manufacturing PMI coming in softer, 48.4. We had the final number from the US S&P, which came in higher than the flash number, still down over last month, but not as bad as it was originally. The ISM, that came in much softer, 48.2, was expected to rise to 49. Prices went up a little bit, not as much as expected, but they still rose. In the other numbers, employment came down or further into contraction at 44 versus 46 prior. New orders also down, 47.4 versus 49.4 prior. So manufacturing over there still in the doldrums. Bank of America expects the Fed to cut by 25 pips in December. They had a previous forecast of no rate cuts, so more rate decision rate expectations, forecasts being thrown in the fire. Just a bit of news on all the spending, Black Friday, Cyber Monday stuff. We do get a bit of analytics out, first from Adobe, who expect the spend in Cyber Monday, i.e. yesterday, at 14.2 billion. That's up, this is US, that's up 6.3% year on year. Their Black Friday sales numbers showed that spending was up 9.1% to something like just under 12 billion. MasterCard saw a 10.4% increase. Salesforce, looking at Cyber Monday, also see sales growing 2.6% to 3.4 billion, and it expects that to grow to 4% and 13.3 billion by the end of the day. Long story short, all those numbers are more positive over last year. Not sure if that's adjusted for inflation and the like, but it was noted that the overall cost was up something like 7% or something over last year. Atlanta Fed GDP now for Q3 unchanged at 3.9%. OECD is out with their latest tea leaves for growth. Global growth is unchanged for this year. They see it unchanged next year, 2.9%, and coming in at 3.1% 2027. US growth was increased to 2% from 1.8 for this year, 1.7 from 1.5 next year, and they see 1.9 2027. Pretty much all growth forecasts have been raised or unchanged for the Eurozone, China, and Japan, for what that's worth. Ukraine stuff. Zelensky says that territorial issues is the most challenging in talks, but says the new peace plan looks better and hopes to have talks with Trump after Witkoff's visit to Russia. He's over there now, and those talks are scheduled to start around 2 p.m. GMT. Look at that, 9 minutes, and all the news is done. Okay, unless you've got anything else, mate.
No, not really fresh news. No. I think we're through.
Good. One of the quickest ever. Oh, this might be a record-breaking quick show today. Right, let's have a quick look at what's coming up today at the US. We've got, we'll have to see if we've got jolts opening. I've truly lost count over what we're getting and when we're getting it at the moment. It's on the calendar, so going to assume we're going to get it. So that's coming out later on potentially, but that's really about it. We've got some possible Fed heads, but I'm not sure if they're going to offer much as well. Bowman speaking a bit later. So aside from that, it could be a pretty quiet afternoon unless we get some headlines from elsewhere. Right, let's have a look at what's going on in prices. Seeing a little bit of a blip in cable. I'm on a 15-minute chart. This 132 level's been holding out for quite some time. That's given way now, and seeing a little bit of a stop run down on that. Also seeing the pound weakening against the euro as well. Not much of a real driver around that at the moment. Gilt yields are holding pretty steady. This looks to be a bit of a dollar move, considering euro is off as well, and back tapping the 116 level where it needs to hold up there. Euro sterling, it's had a little nick through that 88 level, so it's could be that we continue this move. The political news in the UK is still bubbling along. I won't bore you all the details, but Rachel Reeves is still under the cosh from watching you over this budget stuff and the OBR stuff. There's talk and rumours that there might be some political manoeuvring by some people in the party against Reeves and Starmer, Ed Miliband being one of the names touted. So, yeah, this political noise is still rumbling under the surface, and we'll keep you updated on that. But euro sterling, as I said coming into this week yesterday, I would not be surprised if we see this continuing higher for the moment. Whether it's a straight line or not is anyone's guess. But yeah, the mood is still sour surrounding that budget and looking forward. So I'm not expecting the pound to be rocketing anywhere soon. Obviously, against the dollar cable, that's a different kettle of fish altogether. Dollar CAD, yes, go on, mate.
Yeah, on that euro sterling, or on the sterling in general. So I'm sorry. What is it? They made a decision to reduce the FPC, the judges, that the updated appropriate benchmark for the tier 1 capital requirements. They have lowered it by 1%, and which is quite funny that it had zero impact on the sterling. I thought it would have been a bit positive for UK banks, a bit positive maybe for sterling as well, but it had absolutely zero impact on the sterling, which is interesting. On another time, it may have had a bit of an impact. Hello, we don't hear you.
Oh, sorry, I was on mute. Yeah, I've rarely seen the pound move on these financial stability reports unless there's been, big news in there. And it was touted that they were going to reduce this capital buffer ratio, whatever you want to call it.
Mm-hmm.
If anything, they may not have reduced it enough. I think the market might be looking for 2% on that. But yeah, it's bigger fish to fry as far as that's concerned. Plus, it comes with, as I said earlier, it comes with the usual warnings. They're worried about tech valuations, repos, and all that sort of stuff. So yeah, nothing major out of that. But I'm not sure it's behind this uplift in euro sterling or weakening of the quid. Looks a bit of
well, I mean, yeah, maybe if they expected a bigger move, it may be, but yeah, it came around like kind of the top of the hour, maybe prior hour that sterling all of a sudden got a hit. Maybe there's a bit of early months stuff to do in the European morning. Huh?
Yeah, well, that looked to be what happened yesterday. I mean, if you look at what we got yesterday, we got this big lift off in I say big lift off, 40, 50 pips in the euro, which pretty much undid. Dollar yesterday took a bit of a hammering and then recovered all the way back again. So, a lot of pairs did this yesterday, similar move. So I think maybe there was some new month stuff going on in there and catch up from the long holiday in the US as well. Dollar CAD did exactly the same. Did this on Friday, bounced back, recovered, and again, bit of a wobble yesterday, back up, and now it's back up into the 140s. So yeah, I take the end of the month, US holiday, and as I say, we're in a lot of pairs. We're pretty much back to where we started there. So this one needs to do a bit of climbing. We're coming into some old levels again, 140.20s, 140.30s, where we've had all this traffic previously right in this zone. I might actually make it a bit of a zone. So this one could be climbing back up. One pair that is looking a bit iffy as far as my position is concerned, is Aussie Kiwi. That's back on the climb. We're back at this level here. That's going to be pretty important. If we hold this, that's going to keep this down move in play. If we're getting back above it, then we could be going back into this area again, and then this will look like just a little bit of a pullback given the much broader trend. So this is round about where I'm short at the moment, 114.50. So I will not want it to be climbing back above this area.
We have a market.
Sorry?
We have a market.
We have a market, indeed.
Low, right?
Yeah.
So for me, it can go through because that 114 was relatively important, and I've been having a bit of a long position against that zone there, and see if we can get back above here. But yeah, it's still it's not moving a lot, but it still feels to me that Aussie could be doing a little better than the Kiwi. But as you say, I mean, this level has been capping it for a while, so we'll see. It's relatively important. Break back above we could be really more relatively quickly back at 115, maybe. Yeah.
Yeah, exactly. Could well be. We'll have to see what happens with that one. Dollar mix. I ended up doing a little nibble yesterday. 1825s down here. So that one's creeping back up. I was going to add down into this level. I still fancy trading it down to this level, but it's not quite getting down there. Couldn't even quite get down to that prior low that we saw, and that prior low prior to that. So we've got a little bit of a bounce here. Whether it can go all the way back up is another guess. I'm just playing this one for the short term at the moment. But if it fails up here, 35, something like that, then we might be getting a test of those lower levels. And yeah, if it breaks, then I don't know. It doesn't feel like it's going to be a runner if it breaks. Just my initial inclination, shall we say. We couldn't break out the top, so I think we might see similar down here unless there's some big news driving it. I would expect perhaps that there's plenty of stops sitting under here, so we might see a bit of a flush. But if it doesn't start resisting, if we do break here and we get back in the box, then I think it's just going to be maybe a short-term blip. But again, we'll see what happens with that one. Right, mate, I'm going to ping it over, seeing as we're flying through the stuff now. Hang on.
Yeah. Still a perfect symmetry on that dollar mix. If you look at the picture that we had over the past months, right?
Yeah.
1852.3, and then you turn around 1 or 2% above or below, and for the time being, there's no real breakthrough on anything either, right? In the market to take it one way or another. We could still argue that Mexican peso, of course, has a lot higher interest rates than elsewhere, which is maybe still helping it, not weakening too much right now. That I can see, but there's no real reason to start breaking those ranges, right?
No. It's been what, 4 months, nearly 5 months now that we've been pinging around this level. Just quite amazing sometimes how these things work.
Yeah. Let me. What was that? Yeah, it's been quite a while. Okay, now let me get back to it maybe later. Gold. So we had this run through resistances, etc. Yesterday we did a high here, overshot the prior high at 42.45 for about $20, and now we're coming back. Looks like we're going to see these kind of moves continue in gold. For the time being, apart from maybe in a natural demand or something, I don't see too many reasons for it to really continue to ramp higher, but we can't exclude it. So anywhere, if we get, because now we are seeing this pretty decent correction going on again, which again we've seen so many times in the past. I'd keep a close eye on what's happening if we get back down to somewhere from 41.60 down to 41.45-ish, that little range here. That could be that we are seeing demand creeping in there again, because we have been trading this relatively actively this little zone in the past as well. As you can see, highs here, low here, high here, and then again in the past week or so, we had again some decent traffic in that zone. So that's going to be an interesting one to look at. And then for the rest, yeah, I mean, top side, you look at what's going on. If we get back to, let's say 42.15, 20, and then that 42.45, maybe this time, if it breaks, we can really accelerate. Still, overall view remains the same for this thing to remain bid at some point somewhere, because I do think that unless we get a complete resolution of the Ukraine war, um, we may be in for a high print towards the year end. Silver has done that move already. But we also see a pretty violent correction here. Ran just short of that, well, it's still a full dollar, but ran short of that 1618 extension, which is much closer to $60. And now we are seeing a bit of a correction there as well. We're turning around this $57 here. Look at what's happening around 57, 55.70 maybe, if we get back down there. But this zone here around 54 and a half, even down to 54, um, for as long as we're above, it's still looking pretty big, and I still wouldn't really not rule out if we change the big figure before the year is over, and we are closing somewhere in the 60s. Of course, if we start to get back below this 54, 54 and a half, we may see another one of those more violent corrections ongoing. But the way it's went through the prior high, it just still suggests to me that we may not be completely done with silver. It's really, I think we're going to have to monitor really closely what's happening into year end with those metals. They still look pretty much in demand there. Um, have you looked at the dollar yen or not? Because I thought it was relatively interesting what we did here.
No, I haven't looked at that one yet.
Okay, so we had this big move at the start of the year down. The 78.6, no, hang on a minute. Here, the 78.6 of that move came in at around 154 three quarters, also a spike high here. It's a little below this high here and that low here, but the 23.6 of the Takaichi move, that's after she got elected, right? And the 23.6 comes in at around 154.90s. So in this zone, there's a bit of support all of a sudden that crept into the market, which is probably your interesting level to watch now. So anywhere from 154 three quarters up to 155 is going to be important. This line is a fresh one, yeah. So don't really think it's stopped right on the line. It's a fresh one that I put in there today. Top side, we've broken below this line after a few attempts. So that comes in at around 156.15. We are not too far away from there. So I would say that if we get back above there, we could slowly creep maybe back up to 156 three quarters, even 157.15. But there should a decision be made. Okay, we heard from and I trust Ryan spoke about it yesterday as well. Ueda commenting that really putting December on the table, right, for the hike. So that added to the dollar weakness that was seen yesterday, and then the push lower in the dollar yen. But again, having those that dropout, and you look at those prior moves, it's again starting to look like the market, once digested, is gradually creeping higher again. And we could look at all the end crosses who are relatively painting the same picture, but as we know, most of the yen stuff is going through the dollar. But anyway, the crosses are all looking a little bit higher. Yes, you were saying, right?
Nope.
Oh, okay. I thought you were saying something. Um, what's happening on those antipodians, right? Because again, here in the Aussie, we had a bit of a move higher through that 65, 20, 30 after some hesitation, but we stopped right on the 50% of the decline that we had from September into November. So that thing is capping it again. There's still rally, yes. It's going all right. I'm small long, but I won't be holding it if it gets back below this 65.20. It's still very undecided, this one. It really has to push through that high that we put in yesterday morning to continue to push into the 65s, even sorry, into the high 65s, low 66s, where really the bigger decision time will be waiting. But they are not showing too much strength, and this one even less, because we only made it up to the 38.2 of that move, which lies at around 57.5, 57, 50, 60 is really going to be a level where the Kiwi has to push through, or is it 40, 50 rather? No, yeah, 40, 45, 55. Really has to push through here, which is also around the middle zone of this still downsloping channel there. And it's straight away rejected and coming back quite rapidly. Maybe I'm going on a slightly shorter time frame to show this. Got pretty much rejected there again. So look at what's happening just below 57 the figure. If we get there, if we can't hold this 56.90 figure, we may be in trouble again on the Kiwi. Okay, for it to continue to push higher up into the 58s, it really will have to break through that 57.5, and that's where we find this Aussie Kiwi again, where the Kiwi, when it finds a top, tends to correct faster. This move, if you look at it in percentage terms, it's already nearly 1% move, right? So it falters relatively quickly again. The Kiwi, I would say, after this corrective up move that we saw in most of the currencies, including euro dollar, of course. Let's look a quick look at what's happening on the Swiss side of things. We are still holding in the euro Swiss above the 92.90 figure. We are like stabilizing, but stabilizing, I would argue that for the bulls in this one, we are stabilizing at a relatively decent level. Okay, it's holding, and I think it's going to be important to hold that 92.90 figure here. Okay, this is going to be my watch zone. Still a bit long, but if it breaks back below there, I'm probably going to be out of it. But for as long as it goes, I'm keeping the hopium, and see if we can get back slowly creep back into that maybe 94.20, 94.45 in the next sessions. But it's a really game of patience, right? I've already looked at Silver Michael, but I was just saying that we need to be careful, because it could push higher into year end, and for as long as we are staying above 54.5, 54, it's really bullish there, mate. Um, and I think that's about what I wanted to show. Yeah, dollar Swiss, nothing special. Still in a bit of a triangle there. Just will depend on what the dollar has to do. On the dollar in general, Ryan, I don't think what you make of the dollar right now in general. Is there anything really to say? Because it looks like we are doing all those moves up and down. And if you look at the euro dollar, and if you look at the cable, it's a bit similar. But do we really pick a direction right here and now?
No, I don't think so. I think we're just going to
Mm,
tread water. Obviously, we've got the ISM tomorrow, ADP, that sort of thing.
mm,
That's really going to be the last knock-ins before the Fed next week.
yeah,
So yeah, the market's pretty much set that we're getting a cut. So there's nothing
yeah.
really to trade there, unless we get big variation in data that changes that view. But
Mm.
yeah, I think we might, well, until after the Fed, when we get our first round of jobs data. I think we're probably going to be treading water an awful lot.
Yeah. Yeah, I tend to agree. It's doing those moves, and you take all most of the dollar pairs at random, and it's done this move, lower dollar and higher in the currencies, but then you stop in zones where to push through, it really has to go break those levels, and it's not really doing it right. On the cable, I would say we are at a little bit of an interesting level here, and at that 131.8090 just on the day, which has is trying to hold it just right now. If we get below 131.80, we could see a move back down to lower 131's 40.20 or so. But it's interesting if we would hold here because that would keep a, let's say, a mildly positive picture right now. But I'm of the same feeling as Ryan has. It's not really picking a decisive size, but just there's hope. We're at the start of December. We are going to have a bit of data. We're going to have the central banks, and then we are going to have what the big money managers want to do for year end. So there is hope that those moves, or that, yeah, that those pairs pick a real direction going forward. But maybe we'll need to get over the FOMC hump perhaps. And back over to you, Ryan. I'm done for today.
Yeah, thank you very much. And yeah, I was making the case yesterday. We've got a lot of pairs that they've got big levels. They keep testing the levels. They keep nicking under the levels, but they just can't hold under it. That was Aussie dollar 64.40s. We was one
Yeah,
even dollar CAD in that 139.70s. Just a lot of pairs, and even cable it might do the same. It was holding at 132. It might hold under. If it doesn't, if it gets back above, then we're just back in a range. It's another little fake out. So, yeah, until you see some of these levels actually holding and turning up then as support or resistance after a break, it's just a bit rangy otherwise. Right, anyway, that's a nice early one today. Thank you very much for coming to the Flow Show as always. Don't forget that sale. Last chance to get hold of that. Otherwise, we shall see you all tomorrow. Have a great day.